Anyway, welcome everyone for joining us today. A huge shout out to Lucy, to Paul, and to James from Arnold and Porter, who have been our partners throughout this entire process during COVID. Everybody is muted, but we do have the chat box at your lower side and the Q&A. Throughout the presentation, we will be taking questions, and towards the end, we'll leave an opportunity for Q&As. But if you have questions and you want them answered immediately, throw them in the chat and our team will be able to answer those for you. There's been a lot of questions regarding the PPP, its forgiveness program, and now with Congress approving, I believe, one last night or today, and I believe you also have a short intro on that. Again, we thank you for joining us today. This presentation will also be available to you on our website and our social media platforms afterwards. So now I have the pleasure of introducing Paul. Please forgive me for your pronunciation of your last name, Nablin. Is that correct?
Yes.
Okay, and James Joseph from Arnold and Porter. I will turn the mic and presentation over to you. And again, thank you for today.
Excellent, thank you. Good afternoon. As was said, my name is Paul Nabhan and I'm an associate at Arnold and Porter in our New York office. I'm joined by Jim Joseph, who's a partner at Arnold and Porter in our Washington, DC office. And it's our pleasure to discuss the latest regarding the Paycheck Protection Program with everyone today. Let's see. There it is. Our agenda for today is a quick recap of the Paycheck Protection Program, the PPP, just to kind of get reacquainted with it briefly. We'll then talk about loan forgiveness, and then we'll touch briefly upon the new Necessity Questionnaires, and then we will give a quick update regarding tax deductions and the new stimulus bill. So a quick recap, what is the PPP? As we know, it was designed to keep employees on payroll during the COVID-19 pandemic. And kind of the gist of how the program worked was that a bank would make loans to small businesses. And if that small business used the funds as set forth within, by Congress, as was said in the CARES Act, and that loan would be forgiven and the business would not have to pay the loan back to the bank. Those permitted uses included payroll costs, rent payments, certain interest payments, and utility payments. The program was also set up on a first come, first served basis. And as we recall, there was a kind of a mad rush to get a PPP loan when the program first came out. Then in June, after we all kind of had a better understanding of the circumstances we were facing as part of our fight against the pandemic, Congress passed the PPP Flexibility Act, and it made several changes to the PPP. One of them was to extend the maturity date on PPP loans to a minimum of 5 years. It expanded the covered period for loan forgiveness to 24 weeks. It increased the percentage of non-payroll costs eligible for forgiveness up to 40%. It extended the full-time equivalent and wage safe harbor deadline to December 31 of this year. It created exceptions for the inability to rehire individuals employed on February 15, and an inability to hire similarly qualified employees for unfilled positions by December 31, and/or the inability to return to a pre-pandemic level of business because you were complying with COVID-19 restrictions. It also extended the payment deferral period up to the date on which the amount of loan forgiveness was remitted to the lender, and it deferred the employer payroll tax. So, right now we're kind of at a point where, a lot of borrowers are starting to look at whether it's time to start applying for PPP loan forgiveness. So kind of, we wanted to give an overview of what that process looked like at a high level. So, you start with filling out the PPP loan forgiveness application form. And the borrower would submit the PPP loan forgiveness application to the lender. The lender will review that PPP loan forgiveness application, and the lender has to issue a decision within 60 days of receiving the completed application. Now, during this review, the lender might reach back out to the borrower if the lender believes that it needs more information or more documentation in order to make its loan forgiveness decision. It's not a good or a bad thing. It's just, just does the lender need more information? Now, if the lender denies PPP loan forgiveness in any amount, it's not an all or nothing decision. The lender will provide the SBA with its reasoning for such denial and then notify the borrower of such. If the borrower disagrees with the loan forgiveness decision from the lender, the borrower has 30 days from receiving such notice to ask the SBA to review the lender's loan forgiveness decision. Now, there's technically another step. A borrower can also appeal the SBA's decision to the SBA's Office of Hearings and Appeals. Under that process, an administrative law judge will review the administrative record and issue a decision. We don't anticipate seeing a lot of this though, but as a matter of just painting the whole picture, that's part of the process. But as a reminder, kind of overarching this entire process, the SBA can review any PPP loan that it wants at any time, and it can review PPP loans for the borrower's eligibility, for the PPP loan amount itself, the borrower's use of PPP loan proceeds, and the PPP loan forgiveness amount. So from there, the question is, which form do I use? When we gave this presentation back in July, there was only one form. Now there are three. And the two new forms, kind of the idea behind them is, if you're able to use either of these two alternate forms, it's kind of beneficial to do so because it gets rid of the complexity and you don't have to do as many of the kind of frustrating complex calculations behind them. So the first form is Form 3508S. If your total PPP loan amount is $50,000 or less, and the total amount of PPP loans taken, including any affiliates, is less than 2 million, you're eligible to use Form 3508S. The second form is Form 3508EZ. Now, this form, incorporates a lot of the new safe harbors that were brought in as a result of the PPP Flexibility Act. And so kind of the concept here is that if you fall into one of those safe harbors, you don't need to do the calculations because there's an exemption for you now. There are three ways to be able to fit and qualify to use Form 3508EZ. The first is, if you are self-employed or an individual contractor or a sole proprietor, but you had no employees at the time of the PPP loan application, and you didn't include any employee salaries in the computation of the average monthly payroll in the borrower application form, then you can use Form 3508S. The theme kind of there is you didn't have employees, so you couldn't have reduced any of the wages. The second way you can qualify for Form 3508EZ is if you didn't reduce the annual salary or hourly wages of any employee by more than 25% during the 24-week period, compared to that between January 1 and March 21, and you did not reduce the number of employees or average paid hours of employees rather between January 1 and the end of the 24-week period, not including any inability to rehire employees or those employees that refused offers to have their hours restored. And then the third way you can qualify for Form 3508EZ is if you didn't reduce the annual salary or hourly wages of any employee by more than 25% during the 24-week period compared to that period between January 1 and March 21. And this is where it differs from number 2, and you were unable to operate during the 24-week period at the same level of business activity as before February 15, because you were complying with COVID-19 requirements or guidelines or restrictions that were issued between March 1 and December 31 of this year. So those are the 3 ways that you can qualify to use Form 3508EZ. And then if you don't fall in any of the buckets for either of the 2 alternate forms, then you're using the regular old Form 3508. These forms are slightly updated periodically, so we would recommend finding the latest version of these forms at the link that's shown on the bottom of the screen below, just to make sure that when you apply for the PPP loan, you are using the most recent version. And with that, I'm going to kick it off to Jim to talk about loan forgiveness.
Thanks, Paul. So now we're going to dig down into some of the rules that Paul sort of reviewed at a very high level on the loan forgiveness. So, the thing about the PPP that made it so attractive to so many businesses is that it is a loan that can be forgiven. So it basically becomes a grant from the government. And you're able to get not only the principal of the loan forgiven, but also the accrued interest. And to do that, you have to prove that you used the money that you got in the PPP for certain purposes. And the period is the 24-week period. So it's a 24-week period, and that's called the covered period. And that is from the loan distribution date. So the money, the loan hit your bank account, that you got the money. Or they allow you to also start it at the first day of the first payroll period following the PPP loan. So if you, if your payroll period is the first of the month to the 15th, and you got your loan on the 23rd, of April, for example, you could start your 24-week period on May 1st, or you could start it on April 23rd, the day you got the money. And then how can you use the money? Originally, you had to use it for 75% of it had to be used for payroll costs, but the PPP Flexibility Act reduced that to 60%. And part of this was because Congress realized that the PPP was going on a lot longer than people had, or that the pandemic was sort of getting worse over this time, and a lot of people had to shut down. So there was some concern among businesses that they weren't going to be able to spend as much as the PPP required on payroll costs. And we'll go into what we mean by payroll costs in a minute. And then you can also use the other 40% for interest payments on a mortgage, as long as you incurred the mortgage before February 15th, 2020. So it couldn't be a new mortgage. Same thing, you could use it for rent payments, as long as your lease was in place before February 15th. And you could use it for the payment of utilities, as long as you had signed up for the utilities before February 15th. So these were some of the key costs that businesses faced to be able to stay open, help paying the rent, paying utilities so that the business wouldn't have to shut down. Another sort of thing that is very useful is they allow you to include in payroll costs amounts that were incurred during the 24-week period, but weren't paid until after. So what that means, if your 24-week period started on date X and it ended on June 22nd, but June 22nd was a Sunday, for example, and then you pay your payroll, like the 15th and 1st of every month. When you pay your payroll on July 1st that related back to parts of June, you would be able to include those payroll costs through the end of the 24-week period in your calculation. So it is payroll costs incurred during the 24-week period as long as you pay it on your normal payroll schedule. So let's go to the next slide and we'll dig into what's included in payroll costs. I would say that of all the questions we get, this is probably sort of very close to the top of the list. So it is really very, very comprehensive. And for most, one sort of easy way to think about it is it's almost anything that goes on a W-2. So it can be wages, it can be commissions, it can be tips. If you have a restaurant and you have some tip-based income, so all of those things get to be included in payroll costs. And then if you as the employer or your employer pays, vacation, parental, family leave, medical leave, or sick leave, if you get paid elements of that, then that also gets to be included. If you paid people severance payments, so you had to lay people off, for example, but you gave them 2 weeks or a month's, separation pay, that would also be included in payroll costs as long as it was paid or incurred during the 24-week period. The payment of employee benefits for group healthcare coverage, along with insurance premiums and also retirement payments. So if you as the employer are making 401k contributions for your employees, that gets included in payroll costs. And then if you're an independent contractor or a sole proprietor, you get to include wages that you pay to third parties, commissions that you might pay to people who are working for you. You also get to pay or get to include basically what you pay yourself as long as it is subject to self-employment tax. So on your tax form, your 1040, there's a place on the first page that talks about paying self-employment tax, which is the replacement for FICA and FUTA for self-employed individuals. And anything that you included as wages subject to self-employment taxes, you get to include here for loan forgiveness purposes. Now, what does it not include? So it only covers US-based employees. So if an employee lives outside the United States, even if they work in the United States, which probably in the Bronx, you're not seeing a lot of that, but maybe near the Canadian border, there might be a few. But if you have an office and you have employees in Puerto Rico, for example, that would be covered. If you had people in Barbados, that wouldn't be covered because outside the United States. The compensation paid, so these wages, you only get to include up to an annual salary of $100,000. So if someone makes $120,000, you would have to reduce that to $100,000, and then whatever you paid them during the 24-week period reduced to that $100,000 total can be included. Federal employment taxes that the employer pays and the employee. So it's both things. So whatever is withheld from the employee and the employer's share of these things are not included sort of in payroll costs. And then, there are some special family sick leave wages, which are allowable under one of the early COVID relief bills that also doesn't get to be included. They also, if you have independent contractors who work for you, so people who work for you and you don't give them W-2s, you cannot claim them as part of your payroll costs. They have to apply on their own for a PPP to get that. And so we did find with a number of groups that we worked with where there are people who maybe should have been treated as employees, but were not. Sort of those people you're not going to be able to include in the payroll costs now. Next slide. Now, there are a couple of ways. So let's say you do your calculation and you get 100% loan forgiveness. You're not home free yet. There are two ways in which your loan forgiveness can be reduced. As Paul mentioned, the reason for the PPP was to keep people employed primarily and to keep people getting their paychecks during the pandemic. So these provisions are designed to push employers to keep people employed and to keep paying them. So if you reduce the number of full-time employees, or you reduce the annual salaries or hourly wage of employees by more than 25%, then you have to sort of subtract these amounts out of your loan forgiveness. Now, there are a number of exceptions to this, which we'll get to in a minute. But what you're required to do on the employee numbers is you should proportionately reduce your loan forgiveness by the amount that your number of full-time employees were reduced during the 24-week period. And they give you two choices to compare it to, either February 15th to June 30th of 2019, so last year, or from the beginning of this year, so pre-pandemic, January and February of this year. And then there are special rules if you are a seasonal employer. So you have a business where you're only open in the summer, for example, they give you some special rules. So what they do with the full-time equivalent, you basically say, how many employees did we have who were working 40 hours a week during these prior periods? And how many people do we have during this 24-week period working 40 hours a week? And you compare those, and if the number goes down by more than 25%, then you reduce. So if you had 100 full-time equivalent employees and now you have 60, you would need to do the calculation to reduce your loan forgiveness beyond, for whatever you were above the 25%. If people work less than 40 hours, they give you the choice of either calculating each person, like 30 hours for this one and 10 for this one, so they equal a whole, or you can just treat everyone as a 0.5 employee and add it all up. The second way that you can reduce is a dollar for dollar reduction if you reduced specific employees' wages, so the annual wage or the hourly wage more than 25%. So if you basically said to your employees, we're going to keep you employed, but we're giving everyone is taking a 30% pay cut, for everyone below that $100,000 mark, you then have to subtract out the amount that you cut salaries beyond the 25% from your loan forgiveness. But let's go to the exceptions now, because those are huge. The Congress realized that this was going to be really, really hard once the pandemic went on for longer and once state and local governments in particular started to shut down. So they gave us a couple of exceptions. The first one is you can't get your employees to come back. So, you sort of went on hiatus right when the pandemic hit, and you laid people off, and then you wanted to rehire them, and the employees refused to come back. And this was out of a concern if in particular industries, if they were a high risk job, some people might not want to take those jobs again. So what Congress said is, if you can show that you offered them the job and they refused to come back, then you can avoid the reduction for the salary cut or the full-time employee headcount cut. And the day that they look at sort of, you have a safe harbor if you have rehired people by December 31st. So, a couple of weeks now. And if for some reason you can't have hired them back by December 31st, on your loan forgiveness application, you can cite that. You have to keep some paperwork, and then you are able to avoid the loan forgiveness. So that's number one. The second one, which is we'll go to the next slide. This is sort of the one that I think is the most useful at this point. So if you, reduced your employee headcount or you reduce salaries, but if you can show that you were unable to operate during the period, so you're unable to operate at full capacity because of COVID restrictions. And these are COVID restrictions put in place by sort of the government, basically. And even though the rules haven't been specific, this exception applies for state and local regulators, just because so many businesses are being shut down because of that. So if you have a restaurant, for example, and you could not have indoor dining, or you could have indoor dining and then the next day you couldn't, and then you could again, certainly that's the way it has been in Washington with the way they changed the rules. But if you could only be open for outdoors, or you were only open for takeout during a period, and you reduced your head count of employees because you just didn't need a full sort of group working for you, this would be sufficient to be able to show that you couldn't rehire people because of these restrictions, so you won't have your loan forgiveness reduced. Next slide. And so the use of the loan, as we said, 60% of the loan is supposed to be used for the payroll costs. One question that we have gotten is, I didn't end up I'm not getting 100% loan forgiveness. I didn't spend all the money that I was required to spend, during the 24-week covered period. How can I use the money afterwards? Our advice is that you should still use the money, 60% for payroll and 40% for other expenses going forward, or you can also pay it back to the bank, to the government, so that you don't owe it anymore. And the concern is that the way the rules are drafted, it does state that you're supposed to use it 60% for payroll, 40% for these other permitted costs, and they don't say that that's only during the covered period or only for loan forgiveness. So that's why we advise you to follow those rules even after the loan forgiveness, even after the covered period, if you're not getting full loan forgiveness. Paul, I think it's back to you.
Thanks, Jim. So I think we also want to talk about some of the other documents that need to be turned in with the PPP loan forgiveness application. So, unfortunately, it's not going to be as simple as just filling out the form and then turning it into the bank. Kind of the idea is that you're going to fill out this form and you're going to provide substantiation that, the bank can look at some of these records and say, okay, like at a high level, here's what they said on the form and here's what some of these documents say. Therefore, we think that this application is okay. So some of the documents that you'll need to include as part of your PPP loan forgiveness application, in addition to the form, is first, bank account statements or third-party payroll service provider reports that document the amount of cash compensation that you are paying to your employees. Another type of documentation to include will include tax forms. And this will include payroll tax filings, state quarterly business and individual employee wage reporting, and unemployment insurance tax filings. You'll also need to provide payroll receipts or other statements that document the amount of employer contributions to your employees' healthcare insurance or retirement plans, if you provide that for your employees. You'll also need to show the average number of full-time equivalent employees per week during the applicable periods. And what we mean by applicable periods is, if you recall from the safe harbors that Jim was touching upon earlier, you're not only looking at the number of full-time equivalent employees during the 24-week covered period, but you're also comparing it to the full-time equivalent employees you had pre-pandemic. So you'll need documentation showing both. And then you'll also need documentation evidencing the existence of the non-payroll costs prior to February 15 of this year, and that you were paying such costs during the 24-week covered period. So, like your actual lease agreement, old utility bills, something to substantiate that you didn't do something new after the pandemic. And then kind of in addition to that, there are requirements that borrowers maintain all of their records relating to PPP loans for at least 6 years after that PPP loan is either forgiven or repaid in full. And in addition to that, there are other, it's not just the documents that you submit with your loan forgiveness application. There's some documentation that you're required to have, but not necessarily provide to the lender. This would include, your full-time equivalent employee reduction or salary or hourly wage reduction safe harbors, your PPP Schedule A worksheet that's part of the loan forgiveness application, and other, items related to the safe harbor. So, to kind of wrap that up, you keep all documentation for 6 years, but only some of it needs to be provided as part of your loan forgiveness application. And then we also wanted to touch briefly upon the necessity questionnaires. If we kind of remember back, to the spring when the PPP was new and kind of in full force, and there was a rush to get PPP loans, there were certain companies that applied for and received PPP loans that I think Congress thought and the SBA also, for that matter, thought maybe shouldn't have been at the front of the line for that. So, as part of the SBA's efforts to make those PPP loans available to those borrowers who are most in need of them, the SBA required that borrowers assess their economic need in certifying that their PPP loan request was, quote, necessary. And then to supplement that, the SBA announced that it would review all loans that were in excess of $2 million. So then just a couple of weeks ago, the SBA formally published Form 3509. If you're a nonprofit, it would be and it's called the Necessity Questionnaire, and it's for those borrowers with PPP loans in excess of $2 million. And it's to help SBA reviewers evaluate that certification made that the PPP loan was necessary. This form has been a little bit controversial because it contains a good chunk of questions that kind of ask questions that relate to kind of after the fact business activity. So the SBA has come out and clarified that completing the necessity questionnaire doesn't necessarily mean that the SBA is challenging a borrower's necessity certification, but also that the SBA would assess certification as of the time of the loan application, even if later development showed that the PPP loan was no longer necessary. Now, the SBA may request additional information in completing its review, but the borrower would receive an opportunity to provide a narrative response to supplement what was put on the form. So kind of an additional opportunity if that review goes down that route. I would say probably most importantly at this point, if you as a borrower receive a necessity questionnaire from your lender, it's due back to the lender within 10 business days of receiving it. So that's a deadline to keep in mind. I'm going to kick it back to Jim to talk about the deductibility of business expenses for taxes. Jim?
Thanks, Paul. So currently, if you pay expenses and use those expenses as part of your loan forgiveness application, so for example, the 60% of wages that you paid to people during the 24-week period, the IRS and the original sort of PPP rules say that you are not allowed to deduct those expenses as business expenses from your taxes. So, that means they felt that that was a double benefit somehow. But many of us felt that the PPP and the loan forgiveness was designed as a government grant program. So actually, clearly a benefit to businesses being given by the government. And this seemed like it was giving with one hand and taking away with the other. And a number of members of Congress objected to this interpretation. And it seems that was, they felt very strongly about that. And as we'll talk about in a minute, this is one of the things that the agreement that was reached by the Senate and House leadership last night fixes. And they say it will be allowed to deduct these expenses. So we'll see if that law passes today in the House and the Senate, and then we'll see if President Trump signs it. Let's go to so this is what's next on this. So, Congress agreed last night, Pelosi and McConnell agreed in principle to a new stimulus bill. And, if you've been following the news, this has been going around and around and around for a very long time. And they are allocating more money, $284 billion to that. So they kept it under $1 trillion. It's hard, there's so many zeros, it's hard to sort of keep that straight. But they've allocated $284 billion to new PPP loans. And based on the current information that we have in the current drafts, this will allow people, if you got a PPP loan before, it's going to allow you to apply for another PPP loan. And also, if you didn't apply the first time, you will be able to apply this time. They have specifically set aside some of this amount for community development banks and also minority deposit institutions. if you will recall, that this was very controversial with the original PPP, that it was a lot of big businesses with very sort of the big, huge banks that ended up making all of the PPP loans, and a lot of smaller businesses were closed out of that. So they're trying to address that with this problem. They are also, if you happen to be a 501c6 entity, like the Bronx Chamber of Commerce, I assume that you're a C6, you will now be able to apply for a PPP loan. This was a big issue that the Chamber of Commerce, the U.S. Chamber of Commerce, really pushed for this. And that seems to have been included in the bill. There is also going to be some new grants. There was a program called the EIDL grant program, which gave small grants to small businesses sort of early on in the pandemic. And then if you got a PPP loan, you would subtract the EIDL amount that you got from your loan forgiveness. So they're making a small amount, only 20 billion available for new EIDL grants. And we'll see, I don't know exactly what the parameters are of who's going to be eligible for that. But over the next couple of days, we should be hearing more about that. And then the final thing is they are overriding the IRS decision that business expenses that were used for PPP loan forgiveness were not deductible. They're now saying that those would be deductible by the business. We are expecting that Congress, that the House and the Senate will pass this today. And then it will go to the president's desk for signature. The president hasn't said much about anything on the stimulus, but it is expected that everybody wants this to be done before Christmas. If the members of Congress go home to their districts and this is not passed before Christmas, they are expecting a huge backlash. So I think that deadline seems that it's going to hold. So hopefully nothing will interfere with that. Okay, and I think that that is it on that. And we do have some questions. I know we had one question about the whether lease payments, rental payments on equipment can be included. And the answer to that is no, that's only lease payments for, on real estate that can be included in the loan forgiveness amount. And you, let's see, that there's a question about, about the 8-week period. And the covered period we've been talking about is 24 weeks. And that was an extension of the original period, which was an 8-week period. And a number of people, qualified for full loan forgiveness after the 8-week period. And you can still go and apply for loan forgiveness using the 8-week period as your guide and get the loan forgiveness. And this was particularly important for people who qualified at the 8-week, but then the longer the business stayed shut, they had to lay people off. So they actually had laid people off before the end of the 24-week period, which would have then caught them up in the loan forgiveness reduction rules. And so, you can still use the 8-week period if you want. It's an election. The 24-week period is supposed to help people, not hurt them.
We have the, excuse me, I have a question from Stephen Kaufman. In the 60%, is medical coverage and state taxes such as workers' comp included?
Workers' compensation, I think, is not covered. and we can check that. Let me just see. For those of you, the SBA has put out some useful FAQs on sort of loan forgiveness, so that is helpful. But I think workers' comp is not covered premiums, and for the state insurance, the only thing that is covered is anything that you withhold from an employee's salary to get paid to the state for taxes. But amounts on top of that, so, you know, the FUTA or SUTA, in the state unemployment insurance payments that you make as the employer, that does not get included. You know, the FICA payments on top of sort of wages do not get included. So that's why from the wage perspective, you know, anything that gets put on that W-2, even if it's withheld and sent to the state, local, or federal government as income tax payments for your employees, that counts, but stuff on top of that doesn't. Except for the, you know, 401k retirement and health insurance payments that are not taxable, but they did allow for those amounts to count towards loan forgiveness.
Excuse me, interest on lines of credit or borrowing used to keep going during COVID.
I think that is not covered.
That is not, okay. Next question, then I have 3 more in the Q&A. In round 2 of PPP, it looks like there's a threshold of a 30% reduction of revenues to qualify. Is that correct?
I know there is a threshold for reduction in revenue between this year and last year. I don't know what it is just because I haven't had a chance this morning to look at it, but I do know that there is a reduction. Paul, I don't know if you had a chance to look at that.
Yeah, I don't know off the top of my head either. Yeah, I mean, I think the story broke very, very late last night. And so I think we were just still scrambling to kind of reorient ourselves with the new provisions. So I don't know for sure off the top of my head.
Okay,
Again,
that
I
just
think
means we have to bring you guys back one more time.
PPP Part 2.
Exactly.
Kind of like The Godfather Part 2.
I have a question from Sandra Erickson. We got our loan on 5/7 of 109,000. Do we use the 8-week required period, both for payroll and no payroll? Also, I am the president of the business that received the loan. I am also president of the separate entity that owns the building in which my business is located. We pay $1,500 in rent. Can I use the rental expense?
Yeah, and so I answered the 8-week question, the first part. You can use the 8-week period. And as long as you have a lease between the two entities, because there is a requirement that you have had a lease in place before February 15th, then you can count that towards loan forgiveness. There's no restriction for payments made to related entities.
Okay, I believe you may have answered this one. Are fresh loans available with the passing of the new bill? I'm going to say yes. Do S-Corp wages paid to owner for health insurance qualify for forgiveness since health insurance wages are not subject to Medicare or FICA?
So S-Corps are very interesting and they struggled with this. So owners of S corporations can pay themselves wages, and those are subject to self-employment taxes, and those count. And I will have to double check then. I think health insurance and retirement payment amounts do count even if you are an S-Corp owner, but that one will have to sort of get back to us. I will get back to you on that because that one I just do not remember.
Okay. And also we put in the chat for all those on that we gave email contact information for our panelists and experts for any type of follow-up. I have another question here. If you filed for the 8-week period, is the 24 period now factored in determining wages, et cetera? That stretch would make it easier to qualify.
So as I said, the 8-week to 24-week period is an election that you can make. So if you already applied for your loan forgiveness, you'd have to check with the bank to see if you can update your application to include the full 24 weeks. If you haven't applied yet, then you absolutely can look to the 24-week period and just include in the loan forgiveness application everything about your payroll and everything else for the 24 weeks.
I think to add to that, just so that it's clear, if you applied during the first round of PPP and it was 8 week, then you had the option to go to 24 week. You have the option, but if you applied after the PPP Flexibility Act, you're automatically on that 24. So you don't have an option to go from a 24 to an 8 week.
The other way.
Yeah.
Can you use more than 60% of the loan towards salaries?
Yes.
Yes.
60% is a threshold, a minimum threshold.
Okay.
And I did, so I checked also. So for S Corp, contributions for health insurance are not eligible for forgiveness. For the owners or for family members of the owners, you are able to reduce it for retirement contributions, and there's a formula for how much you can include in retirement payments for S Corp owners. And so if you were to Google the SBA's FAQs for loan forgiveness, there's a paragraph on S Corps.
We have a comment in the chat that says, I know I read that you cannot take the rent deduction if you own 100% of the entity that owns the building. I don't know if that's a statement or a question. And while they're looking, our attendees, please feel free to put your questions in the chat box or in the Q&A section. Always remember that we will be sharing this presentation, providing you also the names, the contact information for our expert panelists. And of course, we will be having part 2, 3, and 4 if they so allow us.
So I will have to check on the sort of rent, the ownership of the building, because if they are separate entities, I didn't know that that was a restriction, but we can check. Of course, the one who owns it would be able to include any mortgage payments. So if they're making mortgage payments to the bank because they own the building but have a mortgage on it, then they can count that. But we will need to check on the wholly owned, if an affiliate owns the building.
Fantastic. Do we have any other questions from our attendees? Okay, it looks like you gentlemen did an amazing job.
You only couldn't answer one. I just,
Okay, 99%, you still got an A+. Up, we have a raised hand. I think it's Thompson. Oh, we have 2 raised hands.
3 now. Whoa.
Okay, can you type your question in the chat box for me, please? Oh, here we go. Let's see. Ms. Thompson, yes. Oh, great job in presentation. Keller, he is our chairman. Thank you, Joe.
Okay.
I want to make sure we cover everybody's Okay. If we did not get to all your questions, please follow up with us on an email. Thank you, Paul and James and Lucy, for taking the time out for us today. Oh,
Yeah, there is actually one right now.
one more.
Yeah. Someone says they've gotten calls from people about loan forgiveness and PPP. So the government is not reaching out to people about PPP loans directly by phone. Your bank, certainly the bank may contact you if you have filed your PPP loan forgiveness application. So you do want to be careful. Most of these things are being done by letter so that there's a written record of it. So if you don't know the person and know that they're involved with the bank where you got the loan, I would not give anyone who just calls you out of the blue anything or email. They're basically mailing you questions. If you're under audit, if the SBA decides they're going to audit or do something like that, you'll be notified by mail.
Okay. Call us here at the office. I see that you've tried the first and second time around. With the gentleman on this, we will get you the help you need. I'm hoping I'm not missing anybody. Okay. Oh, there's our contact information.
There we go. And I've aged a lot, so I think I need to update my picture.
But you can always call the chamber office and we will direct all phone calls to our experts. Again, thank you to Arnold and Porter, James, Paul, Lucy for your partnership and in helping to guide our members. This presentation will be available on our panel, on our social media platforms. Thank you so much again. And we will be speaking soon. Happy holidays and Happy New Year to everyone.
Thank you. Thanks a lot.
Thank you.
Okay, bye-bye.
Bye.